Hi everyone, today we'll be going over accounts, February-March 2021, paper 2-2, question number 4. This is structured paper 2, which consists 4 questions, 2 of 15 marks and 2 of 30 marks, and we're also given a time limit of 1 hour 30 minutes. Since question number 4 is of 30 marks, we will be attempting to solve this question under 30 minutes. So without any further delay, let's get started. K Limited produces goods at 2 sites and uses marginal costing. At one site, the company makes a single product, and the following details are available. So we're told that the maximum capacity is 14,500 units per month, fixed cost is 216,000 per month, and we are given the unit selling price, unit direct material cost, direct labor cost, and other variable costs. And for the first part of this question, we need to calculate the break-even point per month in units. Okay, so the formula for break-even point is quite easy. This is just the fixed costs divided by the contribution per unit. And we are given our fixed cost to be 216,000 per month. So now we just need to divide it by contribution per unit, and contribution per unit is just the difference between selling price and the variable cost. So that's 90, which is the selling price, minus our variable costs, which are direct materials, direct labor, and other variable costs. So that's minus 25, minus 36, minus 11. And this gives our contribution per unit to have the value of 18. Let's substitute this. And now the break-even point per month is going to be 216,000 divided by 18, which is 12,000. And this is units. Alright, this concludes the first part of this question. Now we can move towards the second one. We need to define the term margin of safety. So margin of safety is just the difference between the actual or the forecasted sales and the break-even point. Let's write it down. Margin of safety is the difference between actual or forecasted sales and break-even point. Okay, this concludes the second part of this question. Now we can move towards the third one. Now the directors have decided to make the following changes. Reduce the selling price by 2%. Let's do that. So previously, we can see that our unit selling price was 90, so we're just going to reduce it by 2%. That's going to be 90 times 1, and since we're reducing, that's going to be a minus. And the reduction rate is 2%, which we can write down as 0.02. This gives our new selling price to be 90 times 1 minus 0.02, which results in the value of 88.20. Then introduce a sales commission of 2 per unit on every unit sold in excess of 5,000 units per month. Alright, then purchase direct materials in bulk and obtain a trade discount of 20%. Okay, so previous direct materials price, we just need to reduce it by 20% because now we will be receiving 20% trade discount. Let's have a look above. The direct materials per unit was 25. We're just going to reduce it by 20%. So that's 25 times 1. Since this is a reduction, that's a minus, and the reduction rate is 20%, which we can write down as 0.20. This gives the new direct materials rate to be 25 times 1 minus 0.20, which is 20. Then buying direct materials in bulk will increase storage cost by 4,000 per month, and this is a fixed cost because this is per month rather than per units, right? So we need to adjust our fixed cost per month as well. Previously, the fixed cost was 216,000. And we need to increase it by 4,000 of the storage cost, so that's plus 4,000. Which results in the new fixed cost per month to have the value of 220,000. Okay, then we're also told that demand will be 98% of factory capacity. So the sales unit is just going to be 98% of factory capacity. So that's 0.98 times the factory capacity units, which is given above to be 14,500. Let's write it down. So that's 14,500 times 0.98, which gives the total units sold to be 14,210. Okay, now let's move towards the third question. We need to prepare a marginal costing statement to show the monthly profit based on these changes. Okay, we will definitely start with our revenue. Let's have a look above. we can see that the selling price per unit is 88.20 and the total number of units sold is 14,210, right? So the total sales revenue is just going to be the product of these two values. That's the unit sold of 14,210 and the per unit selling price of 88.20, which results in the total revenue to be recorded in our statement to have the value of 1,253,322. Let's record this value in our statement. That's 1,253,322. Now we need to subtract all of the variable costs. And the first one is direct material. Let's have a look above. The direct material per unit is 20 and the total number of units is 14,210. So the total direct material cost will be 14,210 times the direct material rate per unit, which is 20, which gives the total direct material to be recorded in our statement to have the value of 284,200. Let's write it down. That's 284,200. And since this is a variable cost, we need to subtract it, right? So I'm just going to record this in a bracket. Now the next variable cost will be our direct labor. Okay. And we weren't given any changes to the direct labor, so we will use our previous rate. And previously it was 36. So let's figure out the total direct labor. That is just going to be the total number of units of 14,210 times the direct labor rate of 36, which results in the total direct labor cost to be recorded in our statement to have the value of 511,560. Let's record this. That's 511,560. And then the next variable cost was other variable cost. Let's have a look above. Again, we were not given any changes to other variable costs, so we will use our previous rate, which is 11 per unit. So other variable cost will be 11 per unit times the total number of units, which is 14,210. And this gives the total variable cost to be included in our statement to have the value of 156,310. Let's write this down. That's 156,310. And we were given additional information about a sales commission, and this is per unit, which means that this is also a variable cost, right? So I'm just going to write down commission. And we were given a condition actually, and this commission is given to every unit sold in excess of 5,000 units. So let's figure out the excess units. We have the total unit of 14,210 and the excess would be minus 5,000. And this gives the excess units to have the value of 9,210. And now the total commission to be included in our statement would be the new units, excess units, which is 9,210 times the commission rate per unit, which is 2. And this gives the value of 18,420. Let's include this in our statement. That's 18,420. And this concludes all of our variable costs, which means that now we will be able to figure out the contribution. So this is going to be the sum of these five amounts. That's 1,253,322 minus 284,200 minus 511,560 minus 156,310 minus 18,420, which results in our contribution to have the value of 282,832. Now we need to subtract the fixed costs. We already adjusted the storage and figured out our new fixed cost to be 220,000. Let's record this. And we need to subtract this. And the difference between contribution and fixed cost is just going to be the profit for the month. So that's 282,832 minus 220,000, which gives the profit for the month to have the value of 62,832. Alright, this concludes the third part of this question. Now we can move towards the fourth one. We need to explain two advantages of using a system of marginal costing. Okay, so the very first advantage of marginal costing is that it is very useful for short-term decision making because it focuses on the controllable aspects of business, right? And it does so by separating the fixed cost from variable cost, and the controllable aspect would be the variable cost because we can adjust it. Let's write it down. It is useful for short-term decision making as it focuses on the controllable aspects of business by separating fixed and variable costs. And another advantage would be that it avoids the allocation of fixed overheads, right? So it provides more useful data for cost control. Let's write it down. It avoids the arbitrary allocation of fixed overheads and so provides more useful data for cost control. This concludes the fourth part of this question. Now we can move towards the fifth one. Okay, we're given additional information. At its other side, the company makes three products: product X, product Y, and product Z. The following details are available. We're given the contribution per unit, machine hours per unit, as well as maximum monthly output in units for all three products. Then we're also told that the fixed costs per month are 14,100, and each month the company plans to work to full capacity, producing the maximum output of each product. However, in August 2020, only 2/3 of the month's machine hours will be available. And for the fifth part of this question, we need to calculate the machine hours available in August 2021, which is 2/3 of the normal machine hours. So first, we need to figure out the normal machine hours. Let's do that. So for X, we are told that the machine hour per unit is 1.5. So each unit requires 1.5 hours, and the total number of units is 600. So the total machine hours would be 1.5 times 600, right? And this gives the machine hours available for product X to be 900. Now we repeat the same process for product Y. We can see that each product requires 2.5 hours and the number of units is 300. So that's going to be 2.5 times 300, which gives the total machine hours available for product Y to be 750. And for Z, we can see that each product requires 3 hours and the number of units is 200. So we just multiply these two together. And this gives the total number of machine hours for product Z to be 600. And the total available machine hours would be 900 plus 750 plus 600, which is 2250. But remember that in August, only 2/3 of the machine hours will be available. So 2/3 of these hour will be available. Let's figure that out. So machine hours in August 2021. That is going to be the usual machine hours of 2250 and only 2/3. So that's times 2 by 3, which gives the number of hours available in August 2021 to be 1500. This concludes the fifth part of this question. Now we can move towards the sixth one. The additional information is given. The company has a regular order to supply one major customer with 50% of the output of each product per month, and two options are being considered to deal with the shortage of machine hours. The first one is that the finance director has recommended the company makes the maximum profit possible in August 2021, and if necessary, not complete all of the major customers' order. All right. And for option 2, we're told that the sales director has recommended that the company should ensure it fulfills the major customer's order. Let's have a look at the question. For the first part of sixth question, we need to calculate the profit or loss for August 2021 based on option 1. And we know that for option 1, we are recommended to make the maximum profit, right? And we know that we have a scarce resource, which is our machine hour. So in order to determine where these machine hours should be allocated, we first need to determine our contribution per machine hour for each of the 3 products, right? Let's write it down. So that's product X, product Y, product Z. We require the contribution per unit, which is given above. Let's have a look. So for X, that's 15, for Y, that's 20, and for Z, that's 27. Let's write it down. So that's 15, 20, and 27. And now we also require the machine hour per unit, which is again given above. That's 1.5 for X, 2.5 for Y, and 3 for Z. Let's write it down. 1.5, 2.5, and 3. And now we need to figure out the contribution per machine hour. And this is just the ratio of contribution per unit and machine hour per unit. For X, that's going to be 15 by 1.5, which results in the contribution per machine hour to be 10. For Y, that's 20 divided by 2.5, which results in the contribution per hour to be 8. And for Z, that's 27 divided by 3, which results in the contribution per machine hour to be 9. And now we need to rank this. And whenever ranking, we always prioritize the product with highest contribution per machine hour. So in this case, that's X, right? Because it is producing the contribution per machine hour of 10. So we prioritize X first. Then we move on to the second highest, which is Z. So that's rank 2. And for Y, we prioritize it at the last. So that's third. Now on this ranking basis, we need to allocate the machine hours. All right. So for X, since we are prioritizing it first, we need to fulfill all of the orders for X. All right, so X requires the total of 900 hours, right? So we allocate the entire 900 hours for X. Let's write it down. And remember that the total machine hours that we have, we already figured out above to be 1500, right? So that's 1500. So out of 1500, we already allocated 900 to product X. So let's figure out the remaining. That's going to be 1500 minus 900, which is 600. All right, now we prioritize product Z, right? That's rank 2. So for product Z, as we calculated above, we require 600 machine hours. So our remaining is also 600, which means that we can sustain to produce all of the units required for product Z. That's 600. And now the remaining machine hours will be 0, right? Because we already allocated all of the available machine hours to product Z, which means that we have 0 machine hours in order to produce Y. So this just means that we will only be producing product X and product Z in their full capacity, but completely neglecting product Z in order to earn the maximum profit available. Okay. And since we are asked to figure out the profit or loss, we are going to now make a statement. Okay. So we are producing full for product X, right? So we are utilizing 900 hours in order to produce the total number of units, which is 600, right? So we will produce 600. Now, in order to figure out the profit or loss, we first require the total contribution. So the total contribution for product X is going to be the total number of units times the contribution per unit, which in this case is 15 times 600. Let's write it down. And we also need to add the contribution for product Z. We are producing product Z at full capacity by utilizing all 600 machine hours that it requires in order to produce the total number of units of 200, right? So the contribution for product Z is going to be 27 times 200. Let's write it down. So that's 27 times 200. And this gives the total contribution under option 1 to be 15 times 600 plus 27 times 200, which results in the total contribution to be 14,400. Now we just need to subtract all of the fixed costs. And we were given information regarding fixed costs above, right here. So the fixed cost per month is 14,100. Let's write it down. So that's 14,100. And we need to subtract this in order to figure out our profit. Right? So profit in this case would be 14,400 minus 14,100, which is 300. Alright, now we need to figure out the profit or loss under option 2 as well. Let's have a look above. Under option 2, the sales director recommends that the company should ensure that it fulfills the major customer's order. And we know that major customer orders 50% output of each product, right? So in order to sustain this, we have to produce 50% of all 3 products. So that's 300 units for product X, 150 units for product Y, and 100 units for product Z, right? So let's figure out the contribution for these units. Let's do it. So for product X, we are producing 300 units, which is 50% of the total, right? And we know that the contribution per unit for product X is 15. So let's multiply it together. And this gives the total contribution for product X to be 300 times 15, which is 4,500. And for product Y, we will be producing half of its units, which is 150. Let's multiply it with its contribution per unit, which is 20. And this gives the total contribution for product Y to be 150 times 20, which is 3,000. And finally, for product Z, we will be producing half of its units, which is 100. We need to multiply it with the contribution per unit, which is 27. And this gives the total contribution for product Z to be 100 times 27, which is 2,700. Alright, so we allocated these on the basis of the total machine hours available, which is 1,500. And since we produced half of each of these 3 units, we also utilized half of the total machine hours required, which we already listed above. So let's figure out its half. For X, we previously required 900 for full production, but since we're only producing half, we now require half of this. So half of 900 is 450. Again, similarly for Y, half of 750 is 375. And for Z, half of 600 hours is 300 hours. So utilize 450 hours, 375 hours, and 300 hours out of the total available machine hours of 1,500. So let's figure out the remaining hours. So remaining is the total of 1,500, and we utilized 450 for product X, minus 375 for product Y, minus 300 for product Z. And this gives the remaining hours to be 1,500 minus 450 minus 375 minus 300, which means that we still have 375 machine hours available. Okay, so now we also have to utilize these remaining machine hours, right? So the question is, in which products should we utilize it? Since we already fulfilled the major customer's order, now we will again move back to our ranking system in order to figure out the maximum profit. And as we can see here, we ranked product X to be of highest priority. So we obviously will invest the remaining 375 hours in producing product X. Okay, so let's figure out how many units of product X can we produce by utilizing 375 hours. As we can see above, that each unit requires 1.5 hours, right? So if we have 375, then that means that the number of units that we can produce is the total hours available of 375 divided by the hours per unit, which is 1.5, which gives the number of units that we can produce for product X to be 250. Okay, and we know that we only produced half which is 300, which means that the total number of units for X is 600. So out of 600, if we already produced 300, then we still have 300 remaining units, which means that we can still produce 250 units of the remaining 300 units. So we still need to add that contribution as well. So for product X, we will now be producing 250 units, and the contribution per unit is 15. So this gives the contribution for new product X to be 250 times 15, which is 3,750. Now we can easily figure out the total contribution. That's the sum of these four values, 4,500 plus 3,000 plus 2,700 plus 3,750, which results in the value of 13,950. Now we just need to subtract the fixed costs. And fixed costs remain the same. So right here we can see that the fixed cost was 14,100. We just need to subtract it. All right, here the contribution is less than the fixed cost, which means that there will be a loss. And the loss is 14,100 minus 13,950, which is 150. This concludes the second part of question 6 as well as the entire question 6. Now we can move towards the 7th question. We now need to advise which option the company should choose, and we need to justify our advice by discussing both options. Okay, so let's start by discussing option 1. So the major factor is that option 1 obviously produces profit, right? Produces the maximum profit possible. So let's have a look above to see whether this can fulfill the major customer's order. We are producing product X, so it can obviously sustain 50% of product X. Also, we're producing full units of product Z, which means that it can also sustain the 50% of product Z for the major customer. However, we are not producing product Y, so we cannot be sustaining their order, right? So in order to overcome this, maybe we could make up the missing element of the major customer's order by holding products over from previous month's production, right? Maybe rather than selling to other customers, we could hold those product Y from previous month and then sell those products to our major customer this month. Let's write it down. Might be possible to make up the missing element of major customer's order by holding products over from the previous month's production. Okay, let's discuss option 2 now. Under option 2, we see that we make a loss, right? So that is definitely not a good thing. A loss is made, but this would definitely ensure that the major customer is not disappointed and the danger of losing business is averted. Let's write it down. Ensures major customer is not disappointed and danger of losing business is averted. Okay, now based on these factors, we need to advise which option the company should choose. So we can see that in option 2, we will be making a loss, but we will be ensuring that we do not lose our major customer. But like I said before, in option 1 as well, we are producing a profit and we can avert the danger of losing our major customer by holding the products over from last month. And I think doing so makes option 1 a better option as compared to option 2. So I would definitely suggest that the company should choose option 1. Let's write the decision clearly. the company should choose option 1. Okay, this concludes the 7th part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.